Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Here again is the yuck, okay, and here's the 30 weighted moving average. So what's happened here is we broke out of this trading range here. Our moving average, which was sloping down and sloped flat for a little bit, is already now starting to slope up, okay. Depending on where your entry was, okay, it's not really going to be much of a benefit right now as a trailing stop. Once this breaks out through the top, if that's what's going to happen, once it breaks out through the top, then it'll get to the point where it'll become a useful tool as a trading stop. Another suggestion would be possibly to put a faster moving average if you're more of a trader. A 10-period moving average will be closer to the hard right edge of the price, and of course if there's any kind of a sharp reaction, it should be closer to the hard right edge and should get you out with a faster profit. I could possibly insert one as a demonstration. But again, what kind of strategy or what kind of trader are you? What kind of strategy do you have? That'll determine what kind of moving averages you would want to go with. Again, this is TradeStation and it's newest here, so let's stick with the one that I just put on here. And notice how this moving average, it's the same color, but this moving average is very, very close to the right edge of the chart, okay? So, I mean, if I were to get it closed below the low of this weekly candle and I had a profit going from my entry possibly at 105, and I would at least lock in about a penny and a half of the move on this so far, okay? And with options, of course, you know, I could take a partial profit if I have one at this point, sell half my options depending on how many I purchased, okay? And let the rest trail with the moving averages as trailing stop.
That makes sense. Makes sense. Okay, well, I'm going to take this question, and it's from John, and he says, trading options on currencies, are there unexpected volatility changes like equity options? The answer would be yes and no. There are always unexpected changes, but they're not going to be as dramatic. Steve would concur on this one, I'm sure. You know, if you're trading Google, you're going to see times where options could actually just completely explode or wilt away in just a couple of minutes because volatility prior to earnings will change a lot. We don't have necessarily earnings. Now, we do have payroll and different kind of GDP numbers that are going to have a huge impact, but from my experience, I don't see volatility changing all that much, but there are periods, I mean, even in, I guess, like March 17th, where we saw some of the currencies moving, the volatilities moving rather dramatically. And to give you an example, dollar-yen volatility peaked at about 18, and now it's trading in the 10% range. So that's a big move, about 8 clicks, if you will, in trader speak. But if you trade Google, you know that volatility could exceed 60, and it could trade below 30. So you're going to see 30 or even 40 clicks easily in Google and a lot of other equity options. So there's a lot more ranges, if you will, in equity options than there are in FX. You have anything to add there, Steve, on that?
Yeah, that's a great point. That's a great point. Don't forget, we've seen some unusual activity in the financial markets. I guess we're comparing a lot of it to the Great Depression, right? Things that have never happened before since that period in history. So uncertainty, margin calls, selling, forced selling, all kinds of collapsing, people having to just sell everything has caused some volatility spikes that are just out of this world. But since you mentioned Google, 1 second here, because this was a stock. I was teaching the 7-day stock course last week in, this is Google Weekly Chart, by the way. I was teaching the 7-day stock course last week in Orlando, Florida, okay? Now, Google, the funny thing about it is Google had a big explosive move when they had an earnings report right here the week in March when the last time they reported earnings. And here was their latest week of earnings when they reported earnings, and not so good. Okay. So the funny thing about it is this area where that big explosive move used to be resistance, so we expect it to become support. And as far as volatility goes, I priced out the 470 options. The 470 options when Google hit 463, which was the low of that prior candle, were $1,700. They were the August expiration. So the volatility, even after this big sell-off on that, was still out of this world on that stock. So their volatilities are still way, way out of whack. But you have to expect that with the high flyers and stocks that move like Google does. Okay?
Exactly. And even the financial stocks, like you said, Steve, a lot of these, because we just don't know which ones are going to have even further problems, or some of them, I've seen a couple of these regional banks actually have 20 and 30% increases in a day or two. Others are dropping 10 and 20% in a day or two. So it's just amazing what's going on. Let's see, get a couple other questions. How about, Steve, you mentioned your moving average, and Ruth wants to know, weighted moving average is the same as the exponential moving average, and is it, I know you use one period, is it best to just stick with one moving average, or do you find that one period is that much superior to something else?
If I'm a trader, okay, if I'm a more active trader, I would probably want to use a more reactive moving average, okay? When I trade off weekly charts and I talk about the strategies we're talking about now, I like to get in down here at the bottom of the chart in the anticipation of a possible trend move, and I want to have a moving average that keeps me in there as long as possible, okay? And right now, you know, there's only a couple of currencies that are actually moving like they want to go higher. The dollar, it wants to go higher against some of the currency pairs. So if it is the beginning of a long uptrend, that's the currency markets, guys. That's what you came here for. You're looking for markets that tend to trend when they get started in one direction or another. Okay, so that 30 weighted moving average will keep you from stopping yourself out too quickly. Okay, at the 10 moving average, will get you probably a lot sooner trades. The other thing I would say is the Online Trading Academy, we try to teach people, hey, listen, I got out of this trade, you know, I got out early. Okay, what's plan B? Where's my next entry? Where am I going to get back in? Okay, most people are scared to sell because they're afraid they'll never figure out a way to get back in. And you know, I recognize these kind of things. I try to teach people different ways to trade so that they have different opportunities, and sometimes you know, multiple vehicles. I teach stocks, Forex, futures. I teach all kinds of different things. Options are great. Options are wonderful. They're great protection for you. People should take their time and learn more and more. And you guys on the ISE website, Steve, I said it the last time I was here. Education is the key, and you guys do a fabulous job with it. And so that's good for people to learn. And you're going to have some great guests coming up here in the future. I saw Price next week is coming up, and he'll be talking about trends. So once these things get on their motorcycle and they start moving, some advice from Price would be very, very helpful to keep you in your trends.
You know, it's funny, Steve, is that Price will be here next week, but I had Price on in November, and then I forget, you know, a couple months later, and he called that Canadian dollar, and I always kid him about it because all he said, Steve, I just watched the trend. And the trend for the U.S. dollar in late, like let's say September, October was really weak, and he jumped aboard and he was bearish on the dollar, and he wrote it down. I don't know the exact number, but he sort of showed me on his chart, and he said, Steve, I didn't know anything. I just watched the chart. I didn't buy the bottom. I never buy the bottom, but you know, when I did catch most of the moves, sort of like what you're saying is that you just sort of, you know, money management, active management, you're logical, and you watch, you know, what you're doing, your methodology, whatever it is, and be consistent with that. And that's how a lot of our guests seem to do pretty well, but each individual investor has to make their own decisions. Let's take one or two more, Steve.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.